Hi, I'm Hedgeye's founder and CEO, Keith McCullough. Good news, the Hedgeye Investing Summit is back. We're super excited about this one as always. The first week of October, I'll be hosting in-depth conversations with the smartest minds in investing. Some of my favorite people like Liz Ann Saunders, Kyle Bass, and Grant Williams, just to name a few. We'll be discussing the big stuff, the big trends impacting markets in the days, weeks, and months to come. You don't want to miss this one. Registration's free. How good's that? You won't hear pro-to-pro conversations like this anywhere else, anytime. But maybe let's just start with that. You and I were just talking offline, in this world that we're in, which is increasingly volatile on a lot of different fronts. You and I, and we will spend some time on that, market structure, et cetera. What do you think about what's going on?
Well, I mean, this is what we were talking about before. You said embrace the uncertainty. Part of what I'm struggling with right now is that the path forward is very uncertain, right? So if I look at kind of how I'm thinking the world looks, I would suggest it looks an awful lot like the fourth quarter of 2018. You've had a recovery in demand for commodities. You've seen the structure of the world effectively that in 2015, 2016 was all about a dramatic slowdown in the Chinese economy, which of course hits the demand for things like oil, copper, et cetera. That began to recover. You began to see the limits pushed up against, and if you had actually looked at the price of natural gas in the fourth quarter of 2018, or the price of oil in 2018, or the level of interest rates in 2018, they were all indicating that things were, quote unquote, getting much better. And then the bottom kind of fell out, right, for a variety of reasons. We've seen similar time periods in 2010, coming off of the 2009 recovery, where there was a pause in the market. It feels very much to me like we're in that sort of situation. And I think anyone who expresses certainty around what's transpiring when we have the dynamics in play in China, where growth is very clearly slowed, both on a cyclical and on a structural basis. In the United States, you're beginning to see evidence. If you look at home building stocks, they are very clearly rolling over in a way that is very similar to what transpired in the fourth quarter of 2018. Transportation stocks have been weak now for give or take 5 months. You're looking at a lot less certainty around the idea that this is going to recover sharply. And so, do we get a cold winter? Entirely plausible, right? Certainly forecasts for an El Nino would suggest that in Europe and the United States, there's going to be excess demand. On the other side of it, you and I have been doing this long enough, and people always say this, and they always kind of are unwilling to accept it. But the cure for high prices is high prices. Instead of the stimulus now coming through and showing dramatic increases in purchasing power for households, we've actually seen declines in purchasing power for households. And that's in the United States. Go to the emerging markets, it looks terrible. I mean, I would direct people, I've been focusing my own internal team to start to think about emerging market FX. If you look at the Thai baht or the Korean won, right? The Thai baht is almost the one that I would really focus people on. About every 13 years, you get an EM blow up, something goes way off the rails, and the Thai baht falls apart. And we're almost exactly 13 years after, the last cycle in 2008. And I don't want to put numerology on it in any way, shape, or form, but it just feels like that's an area that people aren't paying attention to, is the incipient weakness, in particular in Asia, and the risks that exist around the delivery of commodities, the demand for commodities, et cetera, if something heats up in the South China Sea.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.